Stocks mostly higher as risk demand persists. Wall Street equities finished mostly lower on Tuesday, with the S&P 500 stock index closing lower for the third day in a row, while the Nasdaq Composite ended at a new record despite prevailing risk aversion. The selling pressure prevailed amid concerns over a new strain of coronavirus in the UK and other countries that shifted market focus onto the economic outlook for 2021. On the data front, a final reading of U.S. gross domestic product in the third quarter came in slightly stronger than expected at an annualized growth rate of 33.4%. As a result, the Dow Jones Industrial Average fell 0.67%, the S&P 500 index was down 0.21%, while the Nasdaq Composite index rose 0.5%. Asian stocks were marginally higher on Wednesday, despite President Donald Trump suggesting that he may veto a $900 billion economic aid package. He criticized the aid plan approved by Congress and urged lawmakers to raise payments to the public. Meanwhile, the emergence of a new coronavirus strain in Britain has prompted some 40 countries to ban travelers from Britain. Still, China's Shanghai Composite Index rose 0.76% and the Hang Seng in Hong Kong gained 0.8%. In Tokyo, the Nikkei 225 added 0.33% after the Bank of Japan's October meeting minutes showed that most members said that the central bank's range of steps to ease corporate funding are exerting their intended effects. In Europe, markets closed higher on Wednesday as investors hoped for a Brexit trade deal could be reached after EU chief Brexit negotiator Michel Barnier said that the bloc was making a final push to strike a trade deal with Britain. There were also reports that a deal was also in sight and could be struck on Christmas Eve. Still, gains were limited in light of the new COVID-19 strain, which has been detected in a number of countries, including the UK, Italy, South Africa, and Australia. On the positive side, the US government said it was close to a deal to acquire tens of millions of extra doses of Pfizer, while France reopened its border to England on Wednesday. As such, the pan-European stock 600 rose 1.1%, while the German DAX gained 1.3%, and the French CAC climbed 1.1%. U.S. stocks gained overnight as President Trump asked Congress to increase the planned $600 stimulus checks included in the coronavirus relief package to $2,000. In general, Wall Street trading volumes were thin in the short Christmas week. The Dow Jones Industrial Average rose 0.4%, the S&P 500 index eked out a gain of 0.1%, snapping a three-session slide, and the Nasdaq Composite lost 0.3%. On the data front, the Labor Department said that fewer U.S. workers filed for unemployment benefits last week. There were 803,000 applications for jobless benefits in the most recent week, a decline of 89,000 a week prior. Still, the number remained very high compared to before the pandemic. Other reports showed that personal income slid 1.1% in November and consumer spending fell 0.4%. The Michigan Consumer Sentiment reading and new home sales fell as well. Meanwhile, durable goods orders rose for a seventh straight month. As for currencies, the dollar came back under selling pressure on Wednesday after a short-lived bounce a day earlier. The Euro-USD managed to hold above the ascending 20 DMA and climbed to the 1.2200 figure. Still, the pair stayed off this week's highs around 1.2260. The pound sterling US dollar jumped above 1.3550 amid renewed Brexit hopes, while staying elevated early on Thursday. Meanwhile, the US dollar Japanese yen is still little changed below the 104.00 figure, still being capped by the 20 DMA that represents the key obstacle for dollar bulls. Elsewhere, oil prices, Brent crude, bounced from this week's lows around $49.30, having regained the $51 figure after the Energy Information Administration reported an inventory draw of 600,000 barrels for the week to December 18th. Meanwhile, Brexit hopes helped to foster more expectations of avoiding a hard exit. Earlier this week, oil prices came under pressure amid concerns that a fast-spreading variant of coronavirus would lead to tighter global lockdowns, hobbling energy demand. Asian stocks were mostly positive on Thursday, while equities in Shanghai fell after China's market regulator said that it had launched an anti-monopoly investigation of e-commerce giant Alibaba Group. Alibaba stocks fell over 8% amid reports, while the Shanghai Composite Index lost 0.66%. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.